Hello, everyone. You are once again welcome to today's episode. Today's episode is going to be really brief and concise. So let's go. We are looking at volatility 75, and we are surging into the third week of September. So we are looking at what is going to happen from September 15th down through to the end of the month. So let's quickly jump to the chart. If you are new to my channel, please I will entreat that you subscribe to the channel for more updates on volatility, indices, pairs, and we are more keen on volatility 75. Okay, so if you are new to this channel, please do well and subscribe. If you are a returning viewer, please give me a thumbs up if you enjoyed this video as well. Okay, so quickly let's jump to the chart. Today we are looking at volatility 75. This is the monthly time frame overview. Okay, so what are we seeing now? Currently we still stand in a bearish market structure. Okay, on the monthly time frame we are looking at this bearish market structure hanging right in here, and currently we can clearly see that the recent low that was here was broken down in here. Okay, so we are looking at market surging further downwards. We all know that in a bearish market situation we have market forming lower highs, okay, and then lower lows. All right, so beautifully we are seeing market from the high in here, and then it came to break the recent low right in here. All right, and then what are we expecting market to do? Clearly we can clearly see that when we look back into time, we can clearly see that there is a fair value gap right in here. Okay, and this fair value gap is seated right in a place where we have the market forming, also giving rise to a breaker right in here. Okay, there's a low, there's a high, and then there's a higher low in here. Okay, so we have a breaker right in here, and then we are expecting that price will trade directly into this area of interest, which is into this fair value gap, and then into this breaker, and then ultimately we want to see a reversal happening right into this area if it fully closes in on this fair value gap or partially closes in, because we are expecting that price should react to the breaker right in here. Okay, so this is the monthly picture we can see happening in here. Now let's move down to a lower time frame. So this is still the monthly time frame. You could all see that market was reversed inside of this order block right in here. Okay, there was a bearish order block right in here, and the market traded into it, and then we saw the reversal into the mean threshold of this up close candle right in here. Okay, price traded into this up close candle right in here, and then we saw the reversal down, and then it traded below this low. Okay, now let's go to our weekly time frame. So beautifully on the weekly time frame, for those of you who are in my close group, I showed you specifically about a trade entry that happened right in here. Okay, I had already forecasted that price was going to trade up. When we came down right in here, I already forecasted the price was going to rally back up higher, close above this high. Okay, and then we want to see a rally down. All right, so beautifully price as it traded into this monthly order block, and we can see how price ultimately broke down further, and then it has traded away from the order block, and then we are still trading downwards. Okay, so we have traded below this low. It means that a new swing high has been formed. There's a swing high in here. Okay, so we are looking at where price is going to settle to give us the new swing low. Okay, that's the lower low. Okay, all right, so beautifully that's what is happening on the weekly time frame. When you go down further, the reason why I anticipated that price was going to reverse right in here was the fact that we had an inverted fair value gap right in here. Okay, price had traded below this fair value gap, and then I was expecting that price should go back into this fair value gap, and beautifully it went back into the mean threshold of this fair value gap. Why was I seeing all this? I was seeing this because when price was trading all the way from this side, trading downwards, price formed a lot of highs in here, lower highs in here, that were not violated. Okay, we had, so for instance, we had this beautiful high in here. It traded back into this order block. Okay, so these two continuous up close candles became the order block. Price retraded back into, and then we saw the breakdown. Price came back into this area, traded into the mean threshold of this up close candle in here, and then we saw a breakdown further. It tried again, and then it rallied down. Now when we're rallying down, we left this swing high in here, and beautifully was also in line with the inverted fair value gap. Okay, so I beautifully expected price to go back up here and then sweep liquidity resting in here for us, and then it did that beautifully, and we saw a sharp rally down to close below this low. Okay, so beautifully, that's what's happening on the weekly time frame. Okay, now what have we left untouched? Are there any liquidity reference point that price might necessarily trade back to? Okay, fine. Yes, we can see that price has left a beautiful fair value gap right in here. Okay, that price can necessarily go in there, but are we expecting that price is going to do that this week? Well, let's go down to a further breakdown of the chart and see how it's going to be like. So on the daily time frame, we could see that price traded back a little bit upwards, and then when we grade the swing high from this swing high to this swing low, we could see that we are somewhere around, price is trading somewhere around the 75%, retraced back into 75% of, or the 25% of the trade. Okay, and are we expecting it to go above the 50% level? Yes, it is likely. Yes, it is not likely as well. So why are we saying that it is likely? It is likely because, coupled with the fact that price has traded into the 25, reversed or retraced, sorry, not reversal, retraced into the 25% level in here. We have a fair value gap resting in here. That price dipped into a little, so we have a remainder of the fair value gap resting exactly around the 50% of the swing. Okay, and coupled with the fact that it is resting around this area, we have some breakers right in here. Okay, this down close candle forms, that's the lowest down close candle before the rally up here. So we have this down close candle also at around the same area, okay, which is also going to act as a magnet to attract price there. Yes, this is why I say it can't go there, but why can't it also go there? Now watch this. Let me go down further. Okay, now watch this. So you can see that clearly that on this time frame, we can clearly see that price traded into this fair value gap. Okay, and then we saw the reversal. It didn't just trade into this fair value gap. Watch something. Have you seen this candle right in here? This candle is an up close candle. Okay, it is the same candle that dipped a little bit into this fair value gap, and then we saw the reversal continuing. Now, when price dipped into this and then it closed as an up close candle, we will regard it as an order block. Okay, and now watch this. When price traded back and then closed beneath it, look at where price reversed into the retracement. Sorry, why this is where price retraced into. Price retraced into 25% of this up close candle, acting as our order block. And fairly, we know that when price trades into 25% of an order block and sharply reverses, it is acting as a very strong order block. Okay, usually it does happen with proportion blocks. Okay, yes, so beautifully that's what has happened in here, and we can see clearly how price has rallied away quickly from this area, and then it descended a bit downward in here. Right now, beautifully, this is what we are seeing, that price has traded into a fair value gap, and then we are retracing downwards. Now let's look at what is further down. So this is on a daily time frame. Now let's look at what is further down on the 4-hour time frame. Okay, on the 4-hour time frame, we are seeing that this is the reversal that happened. It happened inside of the fair value gap and 25% into that daily order block. Okay, so price trades. So let's take it a step by step so that you understand fully what is happening in here. We had a swing high in here, a swing low. We had another swing high. We had a swing low in here. Okay, now beautifully you could see how price rallied up here. So it means that this is a swing low, a protected swing. Okay, this is a protected swing low. Now price trades up here and then trades down up. So we consider this from this movement from this high to this low as one continuous swing. Okay, so from this high to this low as one continuous swing. It breaks beneath this swing low in here, this protected swing low. which means that we have shifted structure. Okay, and ultimately price retraces back into this fair value gap and also into that old fair value gap on the daily time frame, and we see how price is being rejected and is trading away from. This is on the 4-hour time frame. Okay, so beautifully on the 4-hour time frame, it tells us that we have had a shift in market structure and we are expecting price to rally away from this area. So as price has traded high this way, and you see, coupled with the fact that when price was retracing into this area, it traded, if you take the swing from this swing high to this swing low, price retraced more than 50%, which means that price has traded into premium and then we want to see a rally down. Before price trades into premium, there is this relative equal highs in here, which usually is a very great and a very strong sign of price retracing and sweeping highs. Okay, so price has swept these highs and then retraced into, and ultimately we want to see a breakdown. So currently what we're expecting to see is we want to see price trade below this accumulation right in here. Okay, we want to see price trade below this accumulation right in here. Now these are some of the things that our mentor ICT Michael teaches. Okay, so beautifully, if we see an accumulation like this, okay, price has traded, broken a structure, we have an accumulation. When price reverses, this swing that you have in here, it is often the manipulation leg. Okay, it's just often the manipulation leg. So we have price moves in this way. We have an accumulation, okay, and then we want to see an expansion. Okay, we want to see a retracement and then a continuous expansion. So when we have an accumulation and we see anything like this, we can't move from accumulation to reversal. We move from accumulation. When we see anything happening this way, it means that it's just manipulation. Okay, so when you have an accumulation this way and we have anything moving outside of that box, it means that this is just a manipulation leg. So inside the manipulation leg, that's when you can catch beautiful trades and then see your way down. Now let's go to the next slide. So on the 1-hour time frame, you can see how the accumulation happened in here. Now I've created something in here for you to have a fair idea of. So if I take a trade, where would I want to take my exit? Where will I want to exit? Now beautifully, you can see that on a 1-hour time frame, there was this swing high that was used to directly break the structure. Okay, so this swing high in here, from this high to this low, represents one major swing. Okay, that was used to break the structure. Now ultimately, what our mentor has taught us is that when it happens this way, you should grade it and know that when price breaks below this accumulation, we want to see an equivalent swing lower. Okay, so price can move just this swing that was used to break the structure in here. We want to see an equivalent swing right beneath when price has taken this low. So we are expecting price to come down, take this low. When it does that, we want to see a relative swing equivalent to from this high to this low. So beautifully, you can grade it and put your trade right in here, put your swing right in here and say that, okay, well, this was the major swing that was used to run the structure. So we are expecting that price would automatically come down and run this side. So beautifully, this is how, and this is what is currently transpiring on the market. I believe that today's lesson is a brief one, but for those of you who have taken a few tips here and there, I believe that it will be of help to you. So I wish you all the best in your trading this week. If you are new to my channel, please do well and subscribe. So I wish you all the best in your trading this week. See you in the next episode.